Everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're discussing natural gas. Maybe we'll touch base on oil as well in this video. Overall, it was a pretty impressive week for natural gas. Natural gas is basically trying to break this downtrend that it had its fierce sell-off in. You're still defending this massive level of support in Nat Gas. You can see this upsloping trend line. The positive for the bulls, and full disclosure, I am bullish on natural gas in the near term and the longer term, medium term, maybe a little bit bearish, but short term, I still think there's more upside. You can see we got that weekly reversal candle. That is a weekly bottoming tail. And it was followed through by another higher weekly close this week. So that is tactically bullish in the short term for natural gas to have a continuation move to the upside. Now, a couple things that I'm going to put on your radar. If we analyze the intraday pattern on natural gas, this is the hourly chart. Basically, natural gas is bubbling up into this original gap fill where it's sold off. But if you draw a neckline crossing down from this pivot to this pivot to this pivot, you can see it tried breaking out here, got rejected. And then participants were able to rally natural gas right back up to that neckline. So technically speaking, this inverse head and shoulders where you have this left shoulder, your head, your big right shoulder is still technically valid. You know, this is a technical pattern intraday that we can trade. And right now, that's a pretty big one. You know, you're talking about a 15% move if this neckline holds. You know, there's always a chance that you can get rejected again. But if this neckline holds, there's a potential for this to have another 14% upside move. And if you look on the daily chart, where would that technically put us? That would put us right back into this previous breakout zone. Now, it's actually not my base case for natural gas to do that 15% move right away. My short term, I'm bullish. My medium term, I'm a little bit slightly bearish, but long term, I'm absolutely bullish. And I think natural gas takes out these highs. But let's look at the price action, technically speaking. And I think what is about to happen is we're going to get a move up. I think we're going to get a move up into this secondary resistance. We've hit this resistance once now, twice. It's likely weakened and we should break through it. But the big technical level that I see natural gas getting rejected at is going to be this previous high here, this pivot over here to this pivot to this failed breakout here, rejection point here again, breakout, back test, breakout. So this trend line, this downsloping trend line, keep that on your radar because that's going to likely confluence with this pivot over here. And that's probably where natural gas is going to stop in the near term. I do think natural gas is going to get rejected here and then sent back down to test either double bottom or even pierce this little double bottom zone. And then once we pierce or test this double bottom, again, I think that's when you get the bigger directional move to the upside. Now, inventories came out this week and it came in positively. It's showing demand is increasing. We're draining the natural gas reserves a little bit faster than what the market consensus is expecting. So it does have the fundamental driver to potentially head a little bit higher here in the near term. But watch this downsloping, this trend line. Now, if natural gas gets a daily close back above this downsloping trend line and starts to consolidate and hold above it, that is tactically bullish, and it could negate my thesis where natural gas gets rejected here and test the double bottom. So bulls really want to see natural gas close back above this downsloping trend line and start to build a base off of this area. You are putting in some short-term higher lows. You can see here's your lows. Here's a higher low. So that is a short term potentially saying that the trend is still in that accumulation stage 2 basing formation. So stage 2 basing formations typically see a lot of chop, a lot of reversals, people getting shaken out, new people coming in. So stage 2 basing formation is designed to basically shake a lot of people out and get new people lured in. So we are still in that stage 2 basing formation in my opinion. And once we get that bigger directional break, that's when that stage 3 move becomes very big. But I still think there's a lot of sellers that need to be shaken out here of the natural gas in order for it to eventually take out this high pivot. I do think eventually natural gas fills this gap, but it's just a matter of being patient and trusting the technical support and buying at key technical support levels. So again, short-term resistance up here. Once we tag that area, I think we go down to test double bottom, even pierce it, and then the bigger move. So looks something like this. If I actually draw it on the chart, I think we get a move up and then a move down and then the bigger move up. So that's just what my forecast is saying. I could be wrong, I could be right. Right now, I am still holding a UNG long, so I remain short-term bullish on the underlying asset. Please give this video a big like down below if you found it helpful, but definitely mark these resistance trend lines on your chart. Take care, everybody. Enjoy the holidays, and we will see you back next week for another wild session. Please definitely check out my tradingcapital.ca Discord service where I run a swing trading and day trading service if you're interested in how I'm trading natural gas moving forward here and into the new year. Thank you, everybody.